Hey, hey, how's it going?
Hello there.
That's my friend D, huh?
That's right. I didn't think I could talk to you. How is this working?
Well, you should be. It's going to give you the
And
ability to either show a camera or just uh, be so on the right there is a screen that you can either show the camera or you can just talk. So,
oh, yeah, I don't know where that is. Is that it?
oh, there you are. Yep, I see you.
Oh, there.
You're looking great. Look at you.
Oh, thank you. Yeah, it's a busy time. I am swamped.
Now,
Right.
is this an actual office for you or
This is my office. Well, the one
okay?
I need to keep, the
The one what?
one I'm still fighting to keep with John's ex, but
Got it.
all's good.
Got it. Got it. Well, what would life be without a fight, right?
Exactly.
All right. Well, you guys do anything fun this summer or just working away?
I'm just working. I think I've got 11 contracts going right now.
Oh my goodness.
Crazy. If you need an assistant, I think I'll quit this and move back to Arizona.
Well, I was gonna say, a decade ago, I said I should have went to work there
Yeah,
with you.
you should have come here. No, you're doing great. I love what you're doing. I think it's marvelous. It's so exciting.
Yeah, no, it's it's getting to be we're getting some traction with what we're doing, and I feel like we've had some loans pay off recently, and so people are excited about that, and so um, I have no clue from week to week who I'm going to get, but what I do is I record these, and then there's a whole group of people that the time just doesn't work for them, and so I send out the recording, and then I get all these messages about, hey, I've got this amount of capital to work with, and we just go to work to try to do the deals. So
I think it's a great idea. And it's a good idea that you record them too, because I miss out on so many because there's just no way I can get into them. But that
well,
seminar you went to, how did that go?
oh, that was amazing. Yeah, it was. So the room's just full of people that are, you know, like-minded, doing deals. But what I find is that in the hallways is where amazing things happen.
Yeah, I bet.
Um, so I see we have Selena and
Yeah.
Siva joins us also. And anyway, welcome to you guys. And Amin, welcome. Um, so um, anyway, yeah, the event was pretty awesome. I've got a little thing here. I want to talk a little bit about that. But I tell you what, it's 5 o'clock, so I'm going to go ahead and go through
Go,
just a
go.
handful of slides, and then we're just going to open it up. And so if there's something here that piques your interest, just um, let's talk about it. I've got a question section, and I'm happy to stay as long as
I
needed to.
I might not be able to stay on that long. I just happened to see the note and thought I'd come in and say hi. So we'll talk maybe another time, okay?
For sure. And I'll send you the recording link back. If you've got 11 contracts you're doing, then um, hallelujah, right?
I'll at
So,
least be listening for a while, okay?
all right. All right. So let me go ahead and I'm going to share my screen here and we're going to get this party started. And so share screen and here we go. All right, so I'm going to talk just a little bit about this past week's event. It was a busy week traveling around, and Uh, I'll just say that when I got home, I made up for it sleeping. Wow, it was like 5 or 6 flights to coordinate getting to Costa Rica, and um, well, not to get there, but trying to get from Costa Rica to Nashville was not easy. I had a direct flight out, but anyway, so this is the Flip Your Capital meetup, and the idea is it's meant to be a step-by-step blueprint for building a six-figure income with private money lending. And I'm going to show you some deals that I'm working on, and I'm going to just kind of talk to you about the concept of this guy Peter that I met and how it shifted my whole business. Because, you know, in at least for me, things seem to every 5 to 7 years something shifts in the market that I've got to shift with. I've got to reinvent myself. So I'm going to go ahead. Hey Joe, welcome. I'm going to go ahead and jump into it here. But I love this quote by Dave Ramsey. He says, if you help enough people, you don't have to worry about money. And so money is a big thing in our lives, especially as we retire. I would just say to you, half of the people out there retiring don't have what they want in retirement, and many of them don't have what they need. And so what my goal here is to help people either put their capital to work or teach you how to do the deals that I'm doing. And but I've got to give you a quick disclaimer, and every deal we do has some risk in it. And like one of my friends said to me, the price of opportunity is risk. And so if you're going to get an opportunity, there's some risk, but our goal is to mitigate that risk as best we can. And we have lots of questions that we go through. And we've done so many of these deals now that, I think we've seen it all. I hope we've seen it all. But our goal is to mitigate risk by lower loan to value. And so we underwrite the borrower and we underwrite the property. And I'm going to talk a little more about that as we get going here. And so there's a statement out there that says small hinges can swing open big doors. And so I want to share just a couple ideas that I had as takeaways. And then my goal is to not be talking more than 15 to 20 minutes and then open it up, answer questions, and kind of talk about deals and different things. And if there's anything that I can help any of you do with deals you're working on, I'd love to do that. So here's some of my key takeaways. One of the first things I'm going to tell you is that um, you need to get in the room. If you want your level to your income to increase or your knowledge to increase, you got to get in the room with the people that are doing the deals. And so here's a funny little story about this Costa Rica mastermind. Is I was hemming and hawing, and honestly, Natalie and I went out to dinner the night before I was supposed to go to the Costa Rica thing, and I just said, I'm just not going to go. Now, I know that sounds bizarre, but I was just going to use points to fly anyway, and so it wasn't a big deal. Well, the guy hosting the Costa Rica event, Shiloh Lundahl, messaged me and said, hey, we're doing a Zoom meetup. Can you join us? And so it was the first night I joined the Zoom, and I saw who was in the room. And these were really successful real estate investors in the room. And while I was on that Zoom meeting, I booked my flight. And in 3 hours, I was on my way to Costa Rica. So I would say it's not, maybe that's not the best way to do it. But when you get in the room, there's things that open up to you. And so one of the things that open up to me, I'm going to tell you a quick little story, is here I am in a minivan. I'm sitting in one of the back seats, and it reclined. I was liking that, and I could straighten out my leg up under the middle row didn't have a seat, and so I could straighten out my leg, and I like that. So I'm sitting back there, and all of a sudden one of the guys says, um, that he loans money to this guy named Michael. And as soon as he said Michael, I knew who he was talking about, but I didn't say a word. I let him go ahead and say what he was doing. And he says, you know, this guy, what he does is he finds people that are in distress, and meaning they're in foreclosure or they're in probate and they've inherited a property, but, you know, there's a reverse mortgage and it's got to be paid off. You know, I call it situational lending. So there's a situation that has to be settled. And so when there's a situation, there's an opportunity. And so what this guy Michael does is he comes in and he just says, look, I'll buy the home because you can't get a loan fast enough to close it. So I'll buy the home, and then what I'll do is I'll lease it back to you. Now, his strategy is that he does not lease it back to him unless he makes $100,000 when they purchase it back from him. So think about that for a second. It's 250, 300,000. And what he does is he uses a hard money lender. Hard money lender funds the deal as a non-owner occupied investment property. Now, interestingly enough, I had lunch with Michael maybe 6 months, it might have been 8 months ago. And Michael had just gotten his new Lamborghini. And I was excited to meet up with him, see the Lamborghini, and talk to him. And I said, what are you doing? He says, man, I'm just doing these purchase leasebacks. But I couldn't figure out how he was pulling that off. And then when I heard this hard money lender in the van say, oh, yeah, I just loan him the money at 11% interest. He buys the home. The loan to value is usually 50 to 60%. He keeps the loan for anywhere from 12 to 18 months, and then he pays me off. Well, I knew the other side of the story. I knew talking to Michael that he didn't make less than 100K doing the deals. So I'm going to pause right there. Does anybody have any question about that strategy? I don't want to like take the whole time for this, but I want to make sure you get that concept. Is anybody got any questions about this?
Well, a year to a year and a half seems like a funny time frame. Why that time frame?
So this particular hard money lender is just wants his money out. He's not charging points. So interestingly enough, in Arizona, it's super competitive for hard money lenders. A lot of them don't charge points. The other thing you need to understand is the state of Arizona has some laws that you can be a hard money lender as long as you don't charge points or fees. And so a lot of the lenders just loan out their money. And I found it really challenging to be a lender here because I can't make any points or fees, right? So go back to your question, Joe, why a year to a year and a half? The hard money lender wants his money out. He's happy if it's out for 12 months or 18 months. It's the same interest to him, and he doesn't have to worry about it. He's got his money placed, it's done. And why does Michael do that? Because what he's trying to do is let that guy qualify for a mortgage. So if the guy can qualify for the mortgage, or the lady can qualify for a mortgage 12 months into it, then so be it. And they don't have, like, you know, a gun, so to speak, to their head to get out of the deal. So does that answer the question?
Well, it does. I was thinking that the reason might be so that you can do the fix and flip and sell with your own financing using that hard money, and then season it for a few months to a year. And that way you don't need to juggle money. And away you go with the long-term loan at the end of that.
Well, here's the rest of the story. 80% of these that Michael does, they don't refinance it.
Oh,
So he gets the entire equity in that home. Now, I'm not saying that's right. I would handle it different if it was me, but he gets 100% of the equity in that home. So now you understand, one of those deals buys him a Lamborghini. I'm not saying it's right. I'm just saying that. And so what I'm really trying to tie down to here is getting in the room. If I hadn't been there, I wouldn't have been able to connect those dots. So I'm going to pause with that. And then I'm more than happy to stay on as we start doing questions. So write down your questions, and I'd love to network mastermind with anybody on the call here that wants to discuss it. But um, that changed things for me. And so guess what? I'm in the car riding with this guy, and I said, so if I find a deal, somebody's in default, and I want to buy the home, you'll lend to me 100% of the purchase price. If my loan to value is below 60%, you'll lend me 100%. He goes, absolutely. As long as you can make the monthly payment, I'll lend it to you. So what I would say, the way that I would rather structure that deal is I would just say to the person, if they can't take me out, I'll split the equity with them, is how I would do it. Because anyway, you do it any way you want to do it. But this guy in the car said, I just want my money working. That's it. So think about that for a second. Who do you know? Hard money lenders, whatever. They just want to keep their money working. And that's what this guy had to say. So, all right. So that was one of the big takeaways. If I did not go to Costa Rica, I would, and I have to tell you, Costa Rica is amazing in a lot of ways, but the roads, I mean, you're going to get a chipped tooth riding in the back seat of a car in Costa Rica. It's like a bucket of bolts bouncing around and potholes and whatever, and 2-lane roads, and um, and then you come to a 1-lane bridge, and oh man, it was something else. So anyway, all right, so that's that.
That reminds me of a taxi ride I had in Korea. In Korea, they might have 3 lanes, but they'll turn it into 7.
Riding on the sides, and anyway, okay, yeah, that's awesome. All right, so I'm going to talk real briefly about the DME in Nashville. So there's a lot that I could say about DME. And the first thing that I'll say is that how do you go to 2 places that are going on at the same time? And it's tough. And so what I did is I went to the Costa Rica thing half of the time, and then I missed, getting into DME when I wanted to, and I was exhausted, so I needed to sleep. And anyway, so the but I'm glad I went to DME, and then there were 2 guys that, and I'm guessing there are more, but there were 2 people that talked about another $100,000 idea. And one of the guys got up and talked about seller finance arbitrage. And as simple as this concept was, I had never heard it explained the way this guy Dan explained it. And I'm just going to give you the simple version. The simple version is you find someone that is willing to seller finance you the home. In a perfect world, it's paid off. And you pay them off over 15 years or 180 months with no interest. Now, I hear you. A lot of you are like, who's going to do that? And I would just tell you, there are consumer protection laws all across this country, because just because your level of intelligence is at a certain level, it does not mean that someone else's level of intelligence is there. And so, and I'm not saying that you're getting over on someone. I'm just saying you'd be surprised what people would do and why they would do it. And perhaps one of the reasons they would do it that way, if they own multiple homes that are paid off, or even 1 or 2, they're going to take a probably 30% hit with taxes. And if you do the math with the interest that they might have received, it's about 6s. And so what you're doing is you're giving them a monthly distribution over 15 years. And then here was the magic trick. And and so what he does then is he turns around and he finds a buyer, and that buyer, the same purchase price. So I neglected to say he does not try to talk down the seller on his purchase price or her purchase price. He just says, you want 250 for the home? I'll give you 250. But I'm going to write the contract where I'm going to pay you out over 15 years with no interest. It's 0% interest. And you don't talk about that part of it. You just say, I'll pay you in, equal payments out over the 15 years. And then the buyer that's buying the home, they could be paying the same 250. And this was the shocking part for me is, so now your interest rate might be 8 or 9 or 10%, but that's for 30 years. And so what you're doing is you're creating an arbitrage that is on the low end, $500 a month for 30 years. And on the high end, it's more closer to 1,000. And when you say, what's the difference between the 500 and the 1,000? It's if you do a higher priced home, you're going to typically have a higher arbitrage. And because that 10% on 300,000 is going to end up with whatever, a couple $1,000 payment, and the payment you owe might be 1,000. So all of a sudden you've created, let's just say hypothetically, you've ended up with $1,000 payment that's scheduled to come to you for the next 30 years. Now let's be real here. Most loans only go, call it 7 years or so. But think of that for a second. You've got 1,000 a month for 7 years or until when that pays off. So I'm going to pause right there. Anybody want to discuss that or have any input? All right. So it's self-explanatory, but yeah, go ahead.
Sorry, I was trying to speak earlier. I was on mute. Really quick. So on that strategy, just walk through the first transaction where you're establishing that seller financing agreement with the seller. Is it just as a straight up purchase sales agreement with just seller financing terms? Nothing more complicated than that?
That's it. Yeah. I mean,
Yeah.
it's a contract for deed, and then you're wrapping it basically with seller financing. Got it. Okay. But the piece of it that was so enlightening to me, I bet I've been to 100 events. I've never heard anybody say it this simply, is that you can buy a home for 250 and you can sell a home for 250, and you've got little to nothing invested other than your time. And I don't want to act like it's easy to find these, but if you could manage to do whatever, one of those a quarter, in 2 years, you'd have a 6-figure income coming off of just these, the arbitrage. And you don't need to raise a bunch of capital, and you don't need lenders. You may need some capital to give the person as a down payment or whatever. But the point is that I was shocked with how simple that was. And so anyway, I'm sharing. I'm giving away the best ideas that I have, and in hopes that we can build a relationship and do business together. So Amin, is there any other questions you have about that?
No, Scott.
All right. So these are two very simple strategies that have paid people extremely well. And the first one, my friend Michael, and his Lamborghini. I mean, it's like, I was meeting with him. It was like, I'm doing hard money loans, and we were doing up to say 10 loans a month, and we were making on average 2,500 a deal. I mean, I was fighting with everybody to get these deals done. And here he is doing one of these a quarter, and he's picking up $500,000 to $1 million a year doing one of these a quarter. So just let that sink in. It's that whole saying of, it's not good enough to want something, you got to know how to get it. And so it's a matter of putting together a hard money lender that would lend to you and then doing a lease back, etc. All right, so moving on. So this past week, I just decided I've got to get some help. I'm missing deadlines to co-lenders and not getting stuff to people. And you know who you are. I owe you different things. I've got a checklist I've been trying to get out, and I've got a list, a real deep list that I'm trying to get out. And I've hired these virtual assistants just to take the pressure off of me, because two of them I've hired and I'm looking for the third. And here's what I'm using them for. The first virtual assistant is basically to help me with the paperwork with the loans. When we do a loan, you know, the paperwork and everything is templated and it's somewhat simple, but it is, you know, it has to be done right, and you got to get the right details in there. And somebody's got to be coordinating with the closing attorney, etc. And so it's, and while I don't mind doing that, it's just, I got 5 or 6 deals I'm working on right now, and it's getting a little stressful. And I don't want to be stressed like this. So I've hired a virtual assistant to help me process the paperwork. The second thing is to help me find, the second assistant is to help me find the deals. You know, messaging contractors, flippers. And what's happening is my business is growing, meaning I just had 2 contractors have loans pay off. One was actually today that everything settled, and then the borrower shot me back a message and said, "Hey, it's time for us to go find the next deal. I'm looking for the next deal." So he was, you know, he's excited to get out there and find the next deal, which I'm excited to have him do as well. But I'm just sharing that this will grow over time. You will get repeat business with the same people over and over that know you, like you, trust you. And the same thing happens with the capital partners. So the guy that funded the deal, I have another deal that is lined up. And I said to him, "Hey, I've got another deal. Here's how it will pay out." And so I'll just tell you, he's going to make $2,500 on the front end. And then he's going to make, it's a second mortgage. So he's going to make 1% a month or 12% annually. And then he's going to pick up another 4 to 5K on the back end when the house sells. And I asked him, I said, "Hey, your money's paying off. Do you want to put it in the next deal?" And his text to me was, "Absolutely. Just get the paperwork done on your end. Like, leave me alone. Just get this, just get the paperwork done." So, and the third VA that I'm bringing in, and this is different, is this VA is going to be someone to help me coordinate capital. And it can't be just anybody. So when you're working with your capital investors, you know, you got to protect their information, etc. And so I've got to do a little more due diligence on this VA, but just know I'm going to have 3 VAs so that I can get on the beach, right? Okay, so, all right, so this is kind of the highlight that I wanted to go over. And so I want to just talk briefly about what's in it for people as a co-lender. And, you know, I met some of you at the DME, and I just want to go over this quickly. And so on the right side, you'll see over here a target yield north of 15%. And so if you get 15%, and you divide it into 72, well, that means in about 5 years, your money doubles. And so this slide is show me the money. And so here's the 3 paydays that we have in our loans we're doing. There's 10% that's a preferred interest, and that's paid to the co-lender, and they're paid first. I mean, everything, the co-lenders in the deal get everything first because they've got the capital invested. The second thing is they get half of the points. So I was on the call today with a borrower who I've known for years. I like this borrower. He got a situation um, that smelt like money, and um, and anyway, the person that he had put a property out with gutted it and did about half of the work and then didn't finish it. And I think some of you have seen the same post, but we're working up a term sheet right now with this borrower. And what I said to him when I was talking to him, I said, "Are you willing to do a profit participation?" He said, "Yes." Well, then when I sent him the term sheet, he goes, "Whoa, what's this 5 point stuff?" I said, "Time out. Remember, you said you're willing to do a profit participation. So on this particular deal, the total profit for our side, he was going to take 60%, we're going to take 40%. And the profit on this deal is north of 25K for us. And so I said to him, I need to structure it the way I need to structure it. And the 5K in origination, I said, that's getting subtracted from the 25K. So I went through everything and subtracted it, and I showed him. I said, "You offered me this as a participation. Let me put it in the boxes that I need to put it in so that I can help my co-lenders feel good about this transaction." So you get 10% preferred interest, you get half of the 5K, and then you get half of the back end. So I'd say plan on 5K on the back end, but it could be up to 10K. And so on this particular deal that we're working on, it's somewhere between, obviously, we don't know what the home's going to sell for. So the low end's 5, the high end could be 10 on this particular deal. So this is a good deal that co-lenders are going to like. And a couple of you on the Zoom, you're going to see this deal go out tomorrow. But I was working on this in the last 24 hours. We got it all put together. The deal's going to happen pretty quick. All right. All right. And so let's talk about what if you went out and you could raise $1 million of private money working with co-lenders. I just kind of want to show you the breakdown of how it's a six-figure business and how the money breaks down. And again, six figures is, $1 million of co-lender capital is not a big number. I had a guy send me a Facebook message today, and he said, "Could you put to work $2 million?" Well, hey, he was tricking me. And I said, "Well, I guess it depends on the terms." And I said, let's jump on a call. He shot me an email and he said, I'm the broker. I'm brokering the deal. I'm paying the lender 2.5 points and I'm making 2.5. If you want to put a point on it, you can do it. And I just grinned and I said, "Hey, listen, I don't blame you for doing what you're doing, but that's probably not going to work for the deals that I'm doing." But so the word's getting out. People are seeing what we're doing with co-lenders and they're saying, "Hey, I got money." And so what I'd rather do is I'd rather my co-lenders get paid. I appreciate that he wants to get paid, but no, me and my co-lenders are getting paid to do this. So if you had $1 million of co-lender capital, how would it work? Here it goes. So there's 4 potential paydays for the co-lender or for the lender, the person putting together the capital, and then the co-lender that's bringing in the money for the deal. So first of all, there's interest spread. So if we put the money out at 15% and we pay the co-lender 10, that means we got a 5% spread. Now it could be up as high as 8%. And you're like, well, what do you mean? Well, we could charge 18% for various reasons. I don't want to go into it right now, but I'm telling you, there's situations where this works. Somebody has a deal that has 100,000 of profit and we're funding it all, then we're going to take a little more on the front as lender fees. So anyway, $1 million out, it's going to pay $50,000 in interest spread. So think about that for a second. $1 million loaned out, 15% interest, you're paying the co-lender 10, there's 50,000 that's coming to you as an income. All right. And obviously if you had 2 million out, that'd be 100 grand. All right. Then there's origination points. So when I was on the phone with this borrower this morning, he goes, dude, you're charging me 5 points. I said, time out. You said you're willing to do a profit participation. I'm subtracting the 5K from it. Oh, I get it. You see how that diffuses it? If it was just me saying I'm a hard money lender, people would fight me. They wouldn't pay me. But when you say I'm looking for a profit participation up front, and I did not dictate what I wanted. I said, what will you offer me if I could bring the capital? And he said, I'll give you 40%. I'll take 60. And so I just said, I'm taking this and I'm subtracting it from it. So it's 5 points or $5,000 that we put on the front. Why? Because I want to get paid right now. And I want my co-lender to get paid right now. I want them to have a win. I had done a syndication and we had this money in a syndication and it was clunky because people were waiting to get paid. And I've just learned it just doesn't, I much prefer my co-lenders getting an immediate payday. All right. So if we do, I want you to think about this for a second. If you do 10 loans and there's 5,000 in fees, that means there's 50,000 total. We divide that by 2, me and the co-lender, it's 25K each. All right. So there's 25,000 on the ledger. Now, if you have lender fees. So it's not uncommon to have underwriting, processing, doc prep, loan servicing. That's not uncommon. It's on all traditional loans that are out there. And so if you have $1,500, which is not excessive, times 10, that's 15,000, right? So if you're the lender putting the deal together, it's 15K. All right. Now, equity participation, that's anywhere from 25 to 50% usually. Remember the one I was just telling you about, the guy offered 40%. So you see that's in the range. And so if the average deal is 10,000 in participation, 5K is going to the lender that put the deal together and 5K is going to the co-lender. And it's being paid at the back end when the loan pays off. So if you do 10 loans in a year, times 10,000 is 100,000 divided by 2, it's 50K. So 50K comes over to your ledger. All right. So now add it all up. And so from just $1 million of co-lender capital placed, you're making $135,000 a year. And I'm just going to tell you, doing 10 deals in a year is a very part-time business. We were doing 10 deals a month and it was stressful, but we were doing it. Like I was just talking to Dee and she's got 11 transactions she's doing right now. It's a lot of work. So all of a sudden I'm talking to you about doing 10 deals in a year. I mean, if you want to do 10 a month, 10 times this number. But if you're looking for something to supplement your income part-time, then there you are. There's your 135K. All right. So what happens to the co-lender or co-lenders that comprise this $1 million? So if out of the 10 loans, let's just say that the average loan's going for 8 months and half of those loans are going to pay off and you're going to be able to put that money back to work. And I'm not even counting that you're going to be able to put that money back to work. But they're going to end up with 10% interest on $1 million, which is $100,000. And then they're going to get the split fees of the 25K that we show you right here. And they're going to pick up the 50K of the back end fees. So that's 75 plus the 100 of interest. They're at 175. So what's their rate of return? Their rate of return is somewhere between, I mean, if we hit 175K, it's 17.5%, but it's better than that because look, these 5 loans paid off and we re-enter in with those 5 loans. So I'm telling you the number's north of 20%, you know, and that's them being passive. I'm being the active one. and it's just a participation. And so I'm going to pause right there and see if there's any questions about this slide.
Nope, all good.
All right, no questions. Here we go. So I told you that I spent all these years working, fighting to make 2,500 as a broker fee. And we moved that number after meeting this guy, Peter, up to 25. And I had participated in 600 fix and flips. It's a big number, and 200 rental properties. And yeah, we made a couple $1 million doing it, but that was over a decade. So it was really a couple $100,000 a year. It was a good living, but you weren't getting rich at it. So now what's happening is that I'm partnering with co-lenders, and we target deals that have 25,000 or more. And so I got rid of the chasing, I got rid of the begging, I got rid of the rate and fee shopping. And so I can do 1 to 2 or 3 loans a month that now equals 10 to 15 loans that I used to do. So that's the beauty of this business. And it's all about working with borrowers that value having a capital partner and that will share the profit participation. And I tell you, every day I probably say no to 2 or 3 deals a day. People will call me and say, hey, I got this deal, blah, blah, blah. And I say no to it. And then if I say no to it, then I send it to Tyler, who happens to be on here. Tyler, do you want to speak up for a second and let people know who you are, that they can send a deal to you?
Absolutely. Good evening, everyone. Always here to support Scott in any way that I possibly can. So yeah, so Scott and I take a little bit different approach to what he's up to, and I'm actually interested in not only being a funding capital partner for him, but also being an investor as well. So I think that out of all the people I do business with, which is quite a large number, I really like what Scott's doing, how he's positioning himself with the audience and the crowd here, and other people that are not here as well that I've met along the way. So anyways, but yeah, whatever I can do to support Scott, I do. Hard money lending, essentially hard money DSCR lending. So Scott and I have a great opportunity to co-venture, joint venture, and also have an opportunity to collaborate with anybody on this Zoom or anybody that watches after on the recorded to be a resource for you to reach out to. If you ever have any non-owner occupied real estate transactions you're looking to do that require first lien debt. So Scott can give you my contact information, always available for new people that have, for just having some fun here, kind of the crazy beginner questions. I'll definitely be patient, spend some time, help you get pointed in the right direction, and also love to compete and win business for people that are doing 2 to 10 deals per month on a regular and consistent basis. So if you got questions about investing in real estate or specifically the loan portion, I deal with some people doing some pretty amazing things and always available to answer questions. So reach out to Scott, he'll get us in touch. And yeah, thanks, Scott, for the intro.
Yeah, for sure. So just go ahead. Go ahead, Joe.
Tyler, where are you from?
So I live in Chicago. Spent a few months in Arizona. I'm 54. Spent a few months in Arizona this year and like to travel quite a bit. I've got kind of a lifestyle. I can fold the computer in half and go work from anywhere, but my kids are out of high school and definitely have a lot more freedom than I used to. But I reside in Chicago. It's actually the grass is starting to turn green.
I met a fellow from Chicago last week in Nashville. I'll send you his name here in a private chat.
Yeah, would love that.
Yeah, so Tyler, just so you know, guys, Tyler is an animal at brokering loans. And so you don't need to be the expert. You can hand that off to him. And in most states, he can pay you a referral fee or a commission, and you can get that deal cut with him. And so I'm sharing that with you simply to say that he's a resource that I use, and you should use him too, because he's really, really good at that. I don't want to work as hard as it takes. And he's got a team that'll process. And so he's mostly the front guy, business development, real smart, knows how to structure a deal real quick, tell you if it's a deal or not, hands it off to his team, and he's off to the next deal. That's really important if you're going to get in this space and start raising private money, because you're going to get people that are going to call in and say they want to do a deal. And so instead of saying no and throw it in trash, you can hand it off to Tyler. And so I've got a couple I need to pass on to him as well. So anyway, so I wanted to make sure that I made that introduction. So, all right, moving along here. And so money flows where it's treated the best. It's just like every relationship you're in life. You mistreat somebody, they don't want to deal with you anymore. And so the idea of capital is most people in life want what is called done for you. And I'd say 80% of people, if you Google it and say how many people want a done for you solution, it'll say 80%. So and that's what we're offering at Flip Your Capital. So if you have co-lender capital, or you just have money that you want to put to work, then my goal is to go to work and put that to work for you. We're doing all the work on our end. We're analyzing the deals, and we're analyzing the borrowers, and we're making sure that there's a fit, etc. And then we're doing a revenue share back. But there's some of you that are like, step aside, Clyde. I'm making this money. You're not getting in my pocket. And I'm okay with that. I really am. Because remember, the whole idea of this group is, like Alex Hermosi said, is you give away the secrets and you sell the implementation. So if somebody needs our help, my help, or want to do a deal with us to get all the documents, and that's what a guy said to me earlier today, I'm just going to do the deal because I want to get your documents and whatever, and I'm more than willing to share that. And these have been hard fought lessons, and these documents have things in it. And I'm going to pause there and tell you, when you're creating your loan documents, one of the things that an attorney taught me, he was a commercial lender, but he was also an attorney, is he taught me that you need to have a waiver of a trial by jury. And I want to pause there and let that sink in. And then does anybody want to talk about why would you even have that in there? Like a waiver of a trial by jury. Okay, so I'm going to tell you what this attorney told me. Amin, did you come off? Joe, you came off. You want to say something?
I could make a guess if you'd like.
Yeah, go ahead.
Most people who would be in a jury, on average, are not wealthy. They would always side with the poor, picked on, oppressed person rather than the wealthy investor.
I love the way you think. Anybody else have a thought on this before I tell you what the attorney told me?
I guess my my simple way of thinking about it, Scott, is just expediting the resolution process.
Yeah, that's the simple answer. But so here's what happens is, when you should be getting a personal guarantee on your loan. What happens when someone defaults? How do you enforce a personal guarantee? And so there's some really critical things that need to be done in the front to have the back work for you to enforce it. And so the line that I use with people when deals go sideways, now listen, if someone's communicating with me and saying, dude, I'm having a hard time, help me figure this out, blah, 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 I roll up my sleeves and I get in there and I'll help. But when someone turns into Casper the Friendly Ghost and I can't find them, and then it goes from friend to foe real quick. And I just remind them, hey, listen, I don't like playing this way. So we can either work this out or we can fight it out. If we fight it out, you waived your right to a trial by jury. You signed a personal guarantee. So what that means is I'm going to get this in front of a judge, and the judge is going to rule without it having to go to a jury to decide, because you waived your right to doing that. And it's going to expedite the process. And not only are you going to have court fees now that you're going to have to pay, you're going to end up with a judgment. And if you don't know, judgments attach to real property, and you can garnish, etc. Now, I don't like playing this way, but I'm going to tell you straight up, I've had like 4 people do really nasty things to me on deals that we loaned money on. You know, for example, loaned money to a lady in Buffalo who was from Toronto, and it's like, what could go wrong? All the numbers made sense, but what could go wrong is that when I gave her the money for the rehab, I didn't give it all to her at once. I gave her part of it. Is she went back to Toronto and abandoned the deal. So she got 10 or 12K out of me, and went across the border to Toronto, and there's nothing I can do. So there is a lesson for you. Anytime you're loaning money to someone, I want to know if they're a resident of, you know, are they a citizen? Are they a resident? Are they here on a visa? What are they doing? And if they live in another country, that's a hard no for me. So, and I have that list that I'm going to put together. And so within our Facebook group here, I'm going to go and add this document, and I hope to have that up there for you guys over the weekend. I was making some updates to it, but you'll have the list of the 20 plus questions that I ask and why I ask the questions. And I learned these from doing these 800 loans that were, you know, where we ran into situations. And so we learned how to ask the right questions. All right. So for the 20% that say, I want to do this myself, you know, I'd say do a deal with me, and, you know, and I'm more than happy to help you anywhere I can along the way with you. All right. And so you guys know Peter's lending model. He started at zero. He used none of his own money. He built a lending empire to $30 million in profit in 8 years. And the key to the whole empire that he built is it's not what you say, it's how you say it. Now, I like to have a little fun with life. And so there's a saying by Zig Ziglar: if you tell a woman that she has a face that will stop a clock, she will smack you. But if you tell her you have a face that'll stop the hands of time, she will hug you. It's the same message. It's just said a different way with different tonality. And when we're working with borrowers, we have to tell them you have a face that'll stop the hands of time. Meaning, when someone calls in or I'm talking to someone about funding a deal for them, I say to them, are you open to a profit participation? Now, all of a sudden their spideys go up and they're like, well, how much do you want? And my answer always is back, well, how much are you comfortable sharing? And, you know, and you go back and forth. You just need to know that my minimum number is 25% or 25K. I think you ought to set that as your minimum number as well. And so here are the terms that Peter taught me: 15 to 18% interest, 5 points, 25 to 50% in an equity participation. And, you know, and you're saying, who in their right mind would do that? Again, it comes back to, it's not what you say, it's how you say it. All right. And so it's a simple concept that I just haven't seen anybody teaching. And what the way it works is that you take the seat of being the lender, and you need to work with a flipper or a contractor, and you need to work with a co-lender. You know, somebody that's got a money bag like this lady here that wants to put it to work, and they want safety, security, and they want it collateralized. And talking about safety, why is it safe? It's because it's collateralized with a hard asset. Security, How is it secured? Well, there's a title policy that gives you a first lien position. It's an insurance policy that protects the lender. And then there is a builder's risk policy or a hazard policy that protects against loss on the property. I don't know of any other investment that works this way. I don't. If you do, tell me. I don't know of it. And so basically what we're doing is the lender or the person building the private money lending business goes out and finds co-lenders that have money that want to make, they want their money to grow. And so they get all three things. They get money now, they get monthly cash flow, and they get profit participation. It's a really good deal for all involved. And so what we're looking for as a borrower is someone that needs fast, flexible funding, has the right experience. I mean, can't be their first time flip, otherwise we're in trouble. And they're willing to share profits. And then voila, we have a deal. We have something we can work with. All right, so I'm gonna stop there, and I'm gonna open it up. And if you got a deal you want to talk about, you got questions, you got ideas, I'm here. I want to discuss it and help you any way I can. Just know I've got like 5 deals on my desk, and I'm working them up, and I'm going to be sending those out. So, who's got questions?
Hey, Scott, not so much a question, but just maybe a suggestion for next session.
Yeah.
If you can get around to posting those questions that you ask borrowers, if we could spend some time in an upcoming session, just to kind of walk through it and ask some of our own questions, that would be
All right.
helpful.
So the 20 questions, I'll get the document posted, and you want to make that the highlight of the whole thing, which I will. I'll cut out most of this other stuff here, and we'll go through those questions.
That'd be great. Yeah, because as we're having these sessions together, and each one's incredibly valuable, I'm piecing together in my head a process, and that step in the process really seems very critical, right? That first review, right? That discovery that you do with the borrower. So, love to dig into it.
Absolutely. And I owe you that list, and so I will make that the priority for next week and make sure everybody gets that. And I'm just going to post it in the group, and then there's a section for documents. I'll post it there. So fair enough. Anything else? Anything else anybody want to bring up? Or
I'd like to bring up 2 things very quickly. And maybe the first one we talk about next week or the week after. It is how you go about vetting a builder or fix and flipper that you're going to fund.
all right. So fair enough, Joe. Why don't we this next week, let's do the borrower. The following week, we will do the flipper, contractor, borrower, etc. I mean, so we've got, well, let me just say it this way. It's the property, and it's the borrower. And I'm going to put the property in the side of the flipper, etc. On the borrower side, if you want to call the contractor and the flipper the borrower, that's fine. We'll put it there, but there's the borrower and there's the property. And we'll break them both down, because there's a series of questions that we go through for both.
Okay. The second thing I wanted to bring up really quickly, you were talking about your VAs and how you're growing your organization. Omero and I are struggling with the same thing. There's about 6 of us, and we're struggling with growing pains and planning and who do we bring in next, etc. We have decided to follow the strategy in this book It's traction.
Yep. No, I'm very
Okay.
familiar with it. And there was a period where I read it and I had a staff of maybe 15 and I was the guy pulling my hair out.
Yep. Well, for anyone out there on this call, I've read it recently and we're walking through the implementation of what they outline. And I'm more than willing to work with you if you would like. If for no other reason, I get practice doing it. So, what's your takeaway from the book?
You know, it's probably been 6 or 7 years since I looked at it, but I would simply say that SOPs are probably the biggest takeaway, and but I'm going to say something that's counter probably intuitive or productive is all my VAs are part-time and I'm part-time. And what I mean by that is I've worked 35 plus years full time. I don't want to work full time anymore.
Yeah.
And so I really don't want to manage more than 4 to 5 million of capital, but I'm more than willing to help others build their business to that level. And so I'm probably not the best guy to talk to because I was at DME and somebody said to me, about let's do this or that. And I just was like, not me, man. Go get the young guy. I'm not interested.
I get it. I mean, all of us on this call are so busy. We've got to really pick and choose and value and honor every hour of every day. I get it, Scott.
So, but I would say to you, why don't we do this? Why don't we do like 3 weeks from now, if you're available, why don't you share some high levels, some takeaways, spend 20 minutes sharing with us some takeaways from the book Traction, for those that are looking. I mean, there's lots of people on here building businesses. So I'd be more than happy to have you share and give input if you like.
I'll meet you halfway. I'll do it in 10 minutes.
All
Because if
right.
I go longer than that, I'll bore the hell out of everybody.
All right. Fair enough.
But
All
10
right.
minutes would be a good chunk.
All right. So I'm going to put that for the third week. And I'll share that info within the group. But all right. So like I said, I have several deals that I'm working on. And if you said, what's my biggest pain point? Um, I'll give you an example of a deal I'm working on in Kansas. I have a borrower that has a $75,000 loan that they need on a home that's worth 200,000. And this is going to be a long-term loan. And so I'm structuring the deal where there's a discount. And so the co-lenders in the deal are going to end up with somewhere between 8 to 9% for 30 years on a loan, and which is different than somebody making 15 to 20%. But the difference with this is it's long term. It's the kind of loan that you set and forget, and gives you that predictable income. And so if I'm being transparent, most of the people that are showing interest in being a co-lender with me are looking for the short-term stuff. And so there's a couple of you on here that I think might be more interested in the long term. If you have any interest in the long term, I'd like to have a discussion with you and structure these deals in a way that work for you, because some of you are really sophisticated. You might end up with a 9% interest rate that you then hypothecate or sell a partial on, and you get your money back, but then you're in the deal for years to come. So anyway, I just kind of conclude with that is if there's anybody that's looking for long-term stuff, message me and let me know, but I'm going to be pushing these deals out pretty quick. So if there's nothing else, we're at an hour here, and I'm going to go ahead and close it down until next week. So anybody got anything else before we close it down?
You know what? Oh, Scott, just like I guess a reminder, you've done the, the good work of setting up a Facebook page. We can continue these conversations on the group page. So that's what I plan.
All right, absolutely. And you'll see me posting some stuff there, and if somebody's got specific questions, by all means, put it on the page.
So,
Anything else?
Talk soon. I got to run.
All right, bye for now.
Wonderful.
All the best.
Good info.
All right, see ya.
Hey, as
For
always, thanks so
organizing
much,
this.
Scott.
Yep, welcome.
Thanks for organizing this. I know it takes time and energy.
Yes, it does. Yes, it does. Happy to see what we can do to grow each other's business, because what we all want the same thing: cash flow and lifestyle.
Yeah. I don't know if I mentioned to you the other day, Omero and I run a seasoned note investor meetup here in Dallas once a month. And most of them are note school people, but not all. And we all just really look forward to that 3 hours a month. It's a great time.
Well, is it open to others to join, or is it a private group?
Probably private.
Okay. If you ever open that up, let me know. I'll just conclude with this little nugget. Frontier Airlines has a pass called Go Wild, and basically you pay $600 a year for it, and then you can hop on any flight they have within 24 hours. You can book it within 24 hours and just go. And I've used that probably 20 times. It's an amazing little service. Now, I'll be the first to admit, Frontier is not my favorite, but you learn how to navigate that. So if you're traveling a bunch, then it's nice. So anyway, so for whatever that's worth. So
Thanks, everybody.
all right, bye for now.